Tonight, Wall Street closing mixed after solid news from the Federal Reserve. Interest rates are still climbing, but the Fed is slowing the pace. The Fed's raised rates by 1/4 point. That's the 8th straight hike in a row. Tonight, Danny Spiewak shares how this will affect your wallet.
By making borrowing more expensive, the Fed's steady interest rate hikes seem to be working to slow demand.
Inflation has come down.
Timothy Kehoe is a professor of economics at the University of Minnesota.
There's been no inflation for the last 2 months.
In fact, inflation rates fell from a peak of 9.1% in June 2022 to 6.5% in December 2022. But now the Fed hopes to achieve a so-called soft landing, taming inflation while not tipping the economy into recession, at a time when the nation's unemployment rate is the lowest in a half-century.
So we're going to have a recession. Danny, I can't tell you. I could debate either side of that. But I'm hoping that we're going to knock out inflation without having a recession.
The fear is a repeat of history. When inflation soared to double digits during the late 70s and early 80s, the Fed moved aggressively to hike key interest rates, followed by the worst economic downturn at the time since the Great Depression.
What's the difference in your mind between what we saw in the 80s and now?
The Fed right now seems to have more credibility.
Bottom line is you feel fairly optimistic about the future.
I am optimistic, but as I warned you, Danny, if you're going to ask me to predict what's going to happen, I'm going to say I don't know.
Danny Spiewak, KARE 11 News.